Yeah, I'm losing my
Futures,
edge.
Pete, this is going to be a fun and hopefully quick conversation here. A big point of contention with people in futures is constantly, it's a derivatives contract. Options are also derivatives.
Right.
Am I trading second or third derivatives? What the hell's going on here? I'm here to tell you it's a lot simpler than you think. If you think a market is going higher, you buy the future. If you think it's going lower, you sell the future. And with that in mind, if you think a contract like we're going to talk about here in a second with metals, if you're looking at the small metals futures here, Pete, and you want to buy them and you want to create a covered call, all you got to do is sell a call in silver or gold. Exactly. And we're going to have options on these futures themselves here from the small exchange very soon. But the covered calls with futures, it's funny, and I shouldn't say funny, but it's interesting because people come over from the options world and they learned covered calls. They learned strangles, iron condors, crazy stuff there in that options world. And they jump over and they almost think like, oh, now I'm in futures. Everything is different.
Right.
But like as simple as the covered call, it's the same mechanics, right? Like I buy the small metals contract and I sell a call against it, right?
Yeah, absolutely. If you have the options on that exact underlying, that's your traditional covered call. You're defining your upside, but you're adding a premium component to it and lowering your deltas. So all a very straightforward, easy thing that translates exactly well from the equity and equity options world to the futures and options on futures world. Absolutely. What is kind of cool with our products, I'm sure you're going to hit on this, is when you have a unique product, and like smallest precious metals being a combination of gold, silver with a European dash of platinum, because I know that's where your focus is right now, but it affords you the ability to options on futures on smalls are coming, but within the world of what we have right now, all kinds of interesting nuanced pieces of the covered call come into play. Different strategies, which are so important.
Absolutely. And we're going to conclude with those different strategies. Really quick, what does that get you, the covered call here, Pete? Well,
best of both worlds.
It gets me long this metals contract, which is in the lowest 20th percentile of this year's range. So it's low. You got a decent value here. You rarely get to buy that lowest low, Pete, but that short call in silver or gold or platinum is actually going to bring my break even down lower. And it's the same story, but a little bit different. I want to cover here in US dollars because this is the most complex the covered call gets because the US dollar is against these other currencies, Pete. So say I want to get short this US dollar here, but similar to metals, not being at their lows, the US dollar isn't exactly at its highs, but it is in that 20th percentile. It's near the highs.
Right.
I can actually use a short call in a foreign currency, futures or ETF options there. And that call works against my short dollar position because it's dollars against euros and Canadian dollars and British pounds and everything else. So if you think about it for a second here, okay, I'm short dollars, I'm long British pounds and Canadian dollars and euros. Thus, I want to sell a call in those. So this is as complex as it gets, but it's as simple as looking at these strategies here right in front of you. And I'm calling them the near extreme trade ideas, where it's like, if a market bottoms out, Pete, and it's at like an all-time extreme, and you just want to get some longs in there, you want to buy it, then you're not really worried about covering it with a call because you want all that upside. But if it's just near an extreme, you want that short call in there to move your break even lower and get you kind of closer to that extreme. So I'm looking at here, long SPRE. You can look at the short 20 delta call in GLD. You could look at a couple of calls in SLV. If I'm short SFX, it's near that upside extreme, I'm short the US dollar, then I can also sell a call in 6B, or I can sell a call in 6C. Those are the British pound and Canadian dollar futures there. And this is a nice covered call in futures, near extreme trade ideas, and showing you how options can get you that break even that's a little bit better than 50-50 while still employing the long or short bias in futures.